I think if you look at the street numbers right now for fiscal 25, is looking for iPhone growth of 5%, 6%. It's been basically flat the last couple of years. This is a lot of talk of a super cycle, but investors are generally following the same roadmap as the traders are, your esteemed traders are today. That's kind of a wait and see. And I would just say one perspective of this wait and see. A lot of the conversation today is about details of announcements, about specific features, pricing, timing, all of that makes sense, but ultimately it is noise. And the reason why it's noise is because to think of Apple Intelligence as a feature is a trap. Ultimately, this is a paradigm shift. This gets back to the question about where can these numbers go. And now I just want to quickly frame in the last paradigm shift we had around Apple devices. It's when the first iPhone came out, going from a flip phone, a keyboard, to a touch screen. There were 7 other competitors out there with touch screens, but none of them were able to capture the power of an app store. That changed a phone to a computer in your pocket. What Apple Intelligence has the power to do is ultimately bring simplicity and infinite intelligence to your pocket. Apple, 1.8 billion consumers are going to want that, Melissa. We're going to have a super cycle. It's going to exceed the 5 to 7% that the street's at.
In an ever-competitive landscape, even giants like Nvidia are not immune to challenges from rising competition that is looking to take their place at the top, leading the next phase of the AI revolution. Recent developments from tech behemoths Apple and Amazon have brought forth some startling revelations, shaking up the market dynamics that Nvidia once seemed to dominate unchallenged for so long now. In an act of defiance and a declaration of competition, Apple and Amazon are looking to take down Nvidia as the leader of the AI revolution and the largest influence on the tech market at large. A vivid reminder that, in the world of technology, dominance today doesn't guarantee supremacy tomorrow, and the tech market will continue to innovate and leap forward no matter the struggle. But what does this mean for Nvidia and the broader tech industry in the future? Let's dive in and uncover the intricacies. Hello everyone, and welcome back to Investocracy.
Move along to Amazon then, which is also on deck. Amazon Web Services growth. AWS will be in focus, especially after Microsoft's Azure service missed revenue expectations earlier this week. Let's bring in Clockwise Capital's James Chuckmuck. James, great to see you. I know you're a big Amazon fan in the past. A lot of love for it when we talk to tech investors lately. What do you think would diminish those flames?
Yeah, I mean, I'll tell you, we've been worried about big tech more broadly for some time now. We've been pulling a lot from 2025 returns, particularly with Apple and Microsoft. But that being said, Meta and Amazon were the 2 out of the big tech that were standouts in terms of most favorable risk reward. That being said, I do think that you should be able to see continued acceleration on the AWS front, improving on the 17% growth last quarter, up to 18 this quarter, and then continued efficiencies on the operating expense line and driving that upside surprise in terms of operating profit. So they have a lot of levers to pull. We think the setup is pretty decent here. But that being said, you got to stay cognizant of the broader economy slowing down and the implications of that for their third quarter revenue guide with the retail business.
Nvidia, the undisputed leader in the AI chip market, has been basking in its success for some time. With its GPUs accounting for up to 95% of AI chip sales as estimated by analysts, its position seemed almost invincible. One could say Nvidia had the Midas touch in AI, much like how one felt about IBM with mainframes and Cisco with networking products back in the day. Alas, history is filled with such tales, reminding us that giants can fall if they fail to innovate. And now, the specter of such a fate seems closer, with warnings from Apple and Amazon casting a shadow over Nvidia's future. Earlier this year, Apple made waves with the announcement of Apple Intelligence, a set of AI capabilities integrated into iOS and macOS devices. These features range from drafting and revising text to generating images and summarizing notifications, all orchestrated under a more advanced Siri. Scheduled for launch in late October, the excitement around Apple Intelligence is palpable. In a technical paper, Apple disclosed that they utilized custom silicon called Tensor Processing Units, TPUs, designed by Alphabet's Google and Broadcom instead of Nvidia's renowned GPUs for their AI training. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, So click the follow button if you don't want to miss the newest market updates. Now, back to the video.
In other words, you're looking for operating efficiencies at a time when others are seeing, higher investment. And Amazon obviously should be the beneficiary of some of those dollars, but they also have to then presumably buy the chips. And that's when obviously the big question mark.
Sure. CapEx is certainly front of mind, top of mind for all investors. But I think that the commentary out of Microsoft, as well as to a lesser extent Meta, bodes well for Amazon. They've been investing in this category with AI for quite some time. They're coming off of a pretty big base. So in terms of, are you going to see a step function increase of the investments, or will it be just an incremental one? And I think it's going to be more the latter, which should be favorable. But really, you just got to stay cognizant. Still, at the end of the day, it's a discretionary spending business, with retail comprising the majority of it.
Right, exactly. And they kind of go with the wind on that front.
Broadcom, in fact, is partnering with other tech heavyweights such as Meta Platforms, OpenAI, and ByteDance on custom AI chips, emphasizing the growing appeal of alternatives to Nvidia's technology. Apple's move is more than a ripple, it's a potential tsunami. If Apple Intelligence stumbles, it will likely be seen as an experiment gone wrong. However, if it thrives, it could set a precedent for others to follow, thereby reducing Nvidia's market stranglehold. As amusing as it is to ponder, it's almost as if Apple's AI strategy is trying to chip away at Nvidia's dominance, pun intended. Amazon, too, has joined the fray, pushing Nvidia's fortress with its own custom silicon. Amazon Web Services, AWS, has developed Trainium for AI training and Inferentia for AI inference. These custom chips may not outperform Nvidia's GPUs outright in terms of sheer performance, but they offer a significant edge in cost-effectiveness. Amazon CEO Andy Jassy was candid about this strategy. We've heard loud and clear from customers that they relish better price performance. We are seeing significant demand for these chips. The bottom line here is clear. While NVIDIA GPUs remain the gold standard, the demand for AWS's custom silicon indicates a willingness among companies to opt for slower, yet more cost-effective solutions. This kind of diversification in preference suggests that NVIDIA's market share might not be as ironclad as it appears, stirring concerns about future profit margins and competitive pressure. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Now, Oracle makes for a great leader because anything connected to the data center has tremendous pin action. Everything from NVIDIA semis. Oh, people keep talking about NVIDIA slowing. I mean, you're just bored by NVIDIA, admit it, or you're jealous of it, because it's not either of those. It's not slowing, it's growing. So NVIDIA semis to bricks and mortar to cooling and backup power to Broadcom's network equipment. You see that stock starting to come back now, I told you. And let's not forget all the electrical infrastructure we need to power these things. The need for data centers and their construction will be with us for multiple years. That's what Ellison told us. I never bet against Ellison. They have nothing to do with Jay Powell and his Murray band of open marketeers decided at next week's meeting. We don't have to play an interest rate guessing game with tech because the Fed is tangential. The data centers will get built whether rates are at 6% or 0. Bottom line, that's how a stock like Oracle, that's up even more than JP Morgan year to date, could hit a 52-week high today while JP Morgan stock plunged. It's how you get leadership you can bank on, and I don't use that verbatimly. You simply can't bank on the bank stocks right now, hence why the great broadening out is indeed fraught with risk. Meanwhile, tech may be torturous to own on a day-to-day basis, but long-term, it's a cornucopia of rewards.
So, what does all this mean for NVIDIA and its investors? Well, simply put, the clear and present threats posed by Apple and Amazon could impact NVIDIA's market dominion. Granted, this doesn't portend an immediate downfall, far from it. NVIDIA's technological prowess and established customer base still anchor it firmly in the AI chip market. But the cautionary tales of past giants like IBM and Cisco serve as poignant reminders that continuous innovation and adaptation are critical for sustained success. As the dust settles, it's evident that NVIDIA finds itself at a fascinating crossroads. Apple's venture with TPUs and Amazon's custom silicon initiatives are significant developments that NVIDIA and its investors cannot afford to ignore. Yet, this is also an exhilarating pivot point, brimming with opportunities. NVIDIA has a storied history of innovation and resilience, factors that will undoubtedly come into play as it navigates these new competitive waters. It's clear that investors should keep a keen eye on NVIDIA. Despite the newly emerging threats, the company's entrenched position and the high demand for its products make it a compelling investment. However, diversification within one's investment portfolio is always prudent, considering the dynamic nature of the tech industry. What do you think about Nvidia's position in the face of these challenges from Apple and Amazon? Is it a bump in the road or an indication of bigger shifts in the tech landscape? We'd love to hear your thoughts as we continue to watch this narrative unfold. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.